Hello everyone, how's it going? I hope that you had an amazing day and a very profitable time with Palantir after such a long wait. If you're watching this video and decided to click on the thumbnail, then chances are you're also wondering about the same question. Will Palantir recover to its former glories back in the heydays and to start a new cycle of bullishness? So as we know, over the past few years, the job market has been looking ever more uncertain in many parts of the world. Inflation has been melting people's saving in economies that used to be deflationary not that long ago. So when all is about to whittle away, we must learn to rely on ourselves and not just the uncertainties of fate itself. In order to secure our own financial future, we absolutely need to find growth opportunities of tomorrow, the ones that can multiply our portfolio's capital by many times, exponentially increasing the money that will be available for investment. Essentially, we need to find this golden goose. So for many years, Palantir has always been one of those stocks, much more than just another tech stock collecting funding in exchange of market share growth like so many other listed on a Nasdaq. It is a major company playing the role of the little canary down the coal mine. It has enough cloud and mystery around it to arouse the market's curiosity, and people's tendency to follow the trend. It is a company that people would often view equally as the risk appetite of the market, alongside Tesla or Apple. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful predictability that makes it a very crucial stock to follow in the market. So in today's video, we're going to take a deep dive into Palantir itself and to see whether it deserves to have a place in your portfolio. Before the video continues, if you like what you see so far, and if you want to watch more Palantir related analysis, as well as for many other companies that I've been covering over the years, please take a look at my channel and to subscribe to stay updated for the latest. First, let's take a look at Palantir's price action. So recently the stock experienced a daily high of $24.98 and a daily low of $23.43. The 5 days short term is very bullish indeed, with a surge of more than 50% for the company. The same can be said for the 1 month trend, with a very significant surge after the recent financial report release. The 6-month price action is suggesting that Palantir is once again attempting to go beyond the $20 and the $25 levels, and hopefully this time, the market will find enough steam to sustain the share price at those levels beyond the immediate hype. The recent price action movement has been encouraged by the financial results Palantir has released, along with the existing AI hype train. The market believes, or rather wants to believe, that Palantir will be able to ride the hype train and to deliver solid results for the shareholders. And in this regard, it is very much a self-fulfilling prophecy, and no one can confidently say where does it truly end, or if it's going to end anytime soon. Taking a closer look at the options market, right now the key strike prices are located between $21 and $22, primarily favoring a call options. So this implies that there's a very obvious interest amongst traders to bet on the stock's upward movement within the price range. Understanding the relevance of options in trading stocks is very crucial. Options provide investors the opportunity to speculate and to have exposure on a stock without necessarily owning it outright, thus limiting the maximum loss one can incur. So, regarding the recent trading volume, Palantir has witnessed a daily volume of 212 million shares, surpassing its average daily volume of 86 million shares. So, volume for stock trading is very significant. It represents the total number of shares traded during a specific period of time. The higher volume it gets, the more obvious the tendency for a strong conviction amongst investors. Understanding the importance of volume in equity trading is vital. An uptick in volume during a price uptrend may indicate a strong bullish sentiment, while a surge in volume during the downtrend can suggest increased bearish sentiment. Monitoring volume trends does help investors to assess the strength and sustainability of any trend. So, Palantir has been, attracting people's attention, especially for retail, due to several factors. It has a perceived high growth potential, which is now confirmed, a successful business model, and minimal dilution. Examining the needs and challenges of retail investors may help provide a neutral assessment of Palantir's position in the market. Retail investors often seek stocks with significant growth potentials, a criterion that Palantir appears to meet, and the company's positive cash flows are indicative of its financial stability and contribute to its appeal for retail investors interested in the growth-oriented ventures. Palantir's proven business model further aligns with the preferences of retail investors looking for sustainable and profitable investment opportunities. So, it's not really surprising that investors often face challenges when investing in the market, and Palantir is not really exempt from those considerations. One challenge is the potential lack of technical knowledge amongst retail investors when researching stocks. It is a complex business model with many operations, particularly its involvement with data analytics, which can be a bit complex for the unsophisticated amongst us. Overcoming this challenge requires retail investors to engage in continuous learning and seek reliable information sources to make well-informed decisions. Another factor to consider is the very nature of Palantir's business. This is a data analytic company with deep ties to some of the least understood and also, I want to say, liked institutions in the world. I sometimes wonder, when does the hype, or could the hype suddenly stop because people somehow realize what they've been investing into. It's a little bit like when people realize that in the end, electric vehicles may not be that green for the environment after the bubble bursted. It's this change of mentality that we really have to look for. So, given the market dynamic as of now, we should also ask ourselves whether the AI craze will eventually also fade away, leaving those with high exposures to this area to suffer huge losses. So, patience is a crucial attribute in the stock market, and retail investors may find it tested. Palantir's extended development history does showcase resilience and adaptability, appealing to retail investors seeking companies with a track record of navigating challenges successfully. However, if we think about it, the influence of hype and speculation is also a very significant factor to consider, and Palantir is certainly not immune to such dynamics. It is essential for retail investors to distinguish between genuine value and market hype. Palantir's positive attributes, its relations, its business model, its cash flows, they need to be assessed against the backdrop of the market sentiment. The appeals extend beyond the financial metrics. The company has cultivated deep relations, signaling stability, reliability, and predictability in its cash flows. This resonates well with investors seeking investments with strong fundamentals and government affiliations. The positive cash flows contribute to Palantir's attractiveness, indicating an absence of need to further dilute the shareholders. So, Palantir also faces challenges. Like we said before, sometimes the tide can turn. It's also a somewhat complex company to grasp our head around. The concerns regarding data privacy and ownership, the controversial reputation, its potential funding ties with intelligence community in the early days, and so on, may all become problems down the road. So, Palantir is certainly capturing the interest and the imagination of retail investors as we speak, because of the perceived high growth potential, a successful business model, and minimal dilution. Challenges that retail investors face should be considered. Palantir's positive financial indicators and public relationships do contribute to its appeal, and we also have to be careful about evaluating the company's dependence on the public sector. Through research and balanced approach, we should be able to make an informed decision in the ever-changing stock market. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. That being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, my opinion on Palantir overall remains bullish. I think that it really deserves a place in your portfolio over time, and that it's still enjoying a very bullish push and also a positive reputation in the market right now. So, although I think that it's an entry with very low buyings right now is recommended, it's better to like go in now and to slowly accumulate the position over time. The maximum exposure should be around 5 to 8% of your portfolio, and the long-term holding is recommended over short-term trading.